Hello everyone, welcome to the IchimokuCharts.com daily analysis for the S&P 500 for Wednesday, August the 31st, 2011. Well, a continuation of the trend to the upside today, and we have a candle that's made a higher high and a higher low, continuing the trend that we've seen over the previous three trading days. Another small-bodied candle, although this body is slightly larger than the previous, so that could be a good sign for the bulls. That means that the buyers have made a slightly larger amount of net bullish progress on the day between the open and the close. Probably not enough to keep this trend going though. What you tend to see are these small bodied candles at the end of a trend and at the beginning of a trend, and it does serve as a warning sign that there is potential for a change of trend. Now, if we look at this candle, we've actually had the market close below the midpoint level, and that tells us that the buyers have failed to take control of this market. It's the first time within the previous 4 days that they've failed to take control, so that could be significant. By the same token, however, neither side has really taken control of this market. The sellers have very, very weak control by closing just below the midpoint level. But this large shadow on the top suggests that the buyers have lost commitment as they were trading up above these areas. And we highlighted the 12.19 area that the market traded to yesterday and was rejected from. And today the market's attempted to trade up through there, tested the resistance at 12.32 and sold off. There's been downside price rejection, and we've closed down below 12.19 once again. So that's a very, very strong area of resistance for this market. Now, with this potential for a change of trend, we do have solid support down below, and there is support just at this swing high, which is at roughly 12.09, 12.08 or so. And we do have solid support at the round number 1200. That's a very big number for this market. We see the previous days trading the market tested below there and the buyers came in. So if the market does come off, then there is strong potential for support there. In Ichimoku charts terms, the market is trading down below the cloud, and that tells us that the market has an overall big picture negative bias. In the medium-term time frame, we're just trading above the Kijun-sen, the pink line here. And that suggests that technically the market is bullish in the medium-term time frame. We have had a change of sentiment there, but we're trading so close to it that it really says that the market is quite neutral in that medium-term time frame. Looking back, however, it has been some time since we've been trading near that Kijun-sen, so it could be significant that we've had this minor close just above there. The market could actually go on with the move. In the fast-term time frame, the market is trading above the Tenkan-sen, the green line, and is continuing that upside momentum that we're seeing in that fast-term time frame. Check our span here, comparing it to the corresponding price action, is below the price action, and that suggests that the market is, or it's confirming this overall negativity that we're seeing in the market in big picture terms. So for tomorrow's trading, obviously the area around 12.32 is very important. Remember, the trend is still up. There hasn't been a change of trend yet. There is potential for a change of trend because of the lack of commitment from the buyers and the lack of control from the buyers. Also, 12.19 is important. It's been tested on a couple of occasions now and has failed. So if we see negativity again in a bearish candle, then there is potential for the market to test down to support around 1200. Next on to light sweet crude oil, and we can see that the trend is continuing up. Once again, the current candle has made a higher high and a higher low, continuing this uptrend action that we have in the first time frame. But it's on a doji type candle, and this does really set the market up for a potential change of trend. The doji candle is where a candle basically opens and closes very close or at the same area, and there's virtually no body to this candle. And this is a candle of much indecision because neither side, the bulls nor the bears, have made any net bullish nor bearish progress on the day between the open and the close. And we can see here over the previous 2 days the buyers were making net bullish progress. Previous days trading, they made less than the day before that, and that did suggest that the buyers may have been losing some momentum, and this confirms a loss of momentum by the buyers. The buyers have actually failed to close the market above where the previous close was, so they've certainly lost any keenness that they had in this market as well. Now, we have had downside price rejection when the market was testing near the 90 level, and that was up around the 89.54 area. And we can also see how the market tested down to the Kijun-sen, the pink line here at 87.60.5, and there was upside price rejection. So good solid downside price rejection, but upside price rejection is also a very indecisive type candle. But that does set this market up for a potential change of trend. Now, it is a harami reversal pattern, a potential bearish reversal pattern. And this is a particular type of harami pattern. It's called a harami cross pattern. And that's because of the doji, and does suggest a fairly strong signal. Now, we do require confirmation of the change of trend with this pattern, and confirmation would be a candle with a lower high and a lower low. So there is potential for that to happen. So we do need to watch the low of the current candle at 87.67 for a potential test to lower levels. Now, there is potential for support at the top of these the three candles here, where we saw downside price rejection and resistance area around 86.50, and also down to 85.11, a previous area, and down to 84. So good solid support down below. If the trend does continue up, we do have resistance at 90, and then no resistance until we trade to 92.57. In Ichimoku charts terms, the market is trading below the cloud, so we have an overall negative bias. Trading up above the Kijun-sen, only just, but bullish in the medium-term time frame, and above the Tenkan-sen, bullish in the fast-term time frame. The Tenkan-sen is the green line. The Chikou span is below the corresponding price action, so that's confirming the overall big picture negativity that we're seeing in this market, but the other two Ichimoku indicators are not confirming the bearishness that we're seeing in big picture terms, bullish in the medium term and fast term timeframes. So obviously for tomorrow's trading there is potential for a change of trend because of this indecisive type candle, but still do watch the area up around 90 and the low of the current candle. Next, on to gold, and here we see that we have a candle that's made a lower high but a higher low, and in bar chart terms that's an inside day and a day of indecision. Previous day's trading, we had the market continuing in the uptrend, making a higher high and a higher low, and a fairly bullish candle. Today, however, we've had also a very small red body candle, and the small body does suggest that the buyers have lost the momentum that they had on the previous day's trading, and the sellers have actually made net bearish progress on the day between the open and the close. We have a large shadow on the bottom of this candle, however, and as the sellers were testing down to the 18.14 previous resistance, we saw them lose commitment. We saw the buyers come back in, and we highlighted that yesterday, that was a level that had potential to offer strong resistance, support. So that is an area that we do need to watch for tomorrow's trading. Now, technically, this is a type of reversal pattern, and the trend was up, and for all reversal patterns we do need a prior trend, and we now have a hanging man type pattern, and that really is a potential reversal because of the small body, essentially. So not a terribly strong reversal, because we do have this large shadow on the bottom where the sellers lost commitment. So we don't have any sign of strength from the bears, but we actually do have a sign of a lack of commitment from the buyers between the open and the close here with the small body, and that's what suggests the potential for a change of trend. In Ichimoku charts terms, this market is trading up above the cloud and a long way above the cloud, and we saw the breakout quite some time ago, which was a bullish signal for in Ichimoku charts trading. We are still trading up above the Kijun-sen, the pink line, so the market is bullish in the medium-term time frame, but that Kijun-sen has turned flat, and we are seeing congestion here. So there's no trending action over the previous 3 trading days. Technically, we did see the market making higher highs and higher lows, but making very little progress above these highs as we're making those higher highs. In the Kijun-sen is also flat, as I've said, and there is still potential for the market to trade back towards the Kijun-sen. So we should be aware of that if we are set up for a potential change of trend with this hanging man type pattern, then there is potential to trade down to 17.58 if we do see weakness in the market, and if we do test down below 18.14 and have a bearish close down below there. reference to the Tenkan-sen, the green line here, the market is still trading up above the Tenkan-sen. So we have a market that's bullish in the fast-term time frame, and a market that tested to the Tenkan-sen, which is trading just below this 1814 support, and that's also had its influence as support for this market. So that is a very important area to consider for tomorrow's trading if we do see a sell-off. So obviously, that area is important for the next day's trading. Certainly, the area around the highs here, which is roughly around 1840, 1841, we've seen the market test there on 3 occasions. If we do see bullishness up above there, we certainly could see the market quickly trading up to around the 1920 level.